And we're going to start with Google, or as it's sometimes known, Alphabet Inc. Now, this is a bugbear of mine, but we'll talk about that in a minute. This is, of course, the internet search company, which has got all the advertising technologies. It's all about search. That's where they make the money. But as far as social is concerned, we're talking about YouTube, which is more and more popular for the kids. It's the Android platform, which means Google Play and everything else behind it, and a plethora of other businesses in this space, which make it very attractive. Core, though, coming back to the end of the day, is the business valuation is based on that very highly profitable internet search-based flow, right?
Yeah, it's basically, you can split...
Oh, sorry, before you get going, I'm supposed to tell. My director says yes. Now, market cap, one of the largest companies in the world, $563.52 billion. Oh, my God. Price to earnings ratio, 30.28, no dividends. Yes, right now you can say what you were going to say.
Okay, so when you look at Google, it basically has... its revenue is split into three parts. Okay, you have ad sales, which is based on the search engine platform as well as on YouTube. Then that's about 87%. Then you have about 12% of their revenue coming from Google Play, and
which is sales of paid apps.
Yeah, and music and all the rest of it that you get off of Google Play.
Okay.
The little margin, it's a small little margin. And then you've got about 1% coming from other bets. So these are their crazy ideas. Driverless cars, Google Home, which is a thing where you're actually telling this device to put on the light in your horrible teenage son's bedroom so that he can wake up and you don't have to even deal with it.
Right.
So that's
sounds like a plus, yeah?
Yes. So that's Google Home. They've got a virtual reality headset and all the rest of that stuff, and it generates about 1% of revenue.
But let's come back to the 87 because that's much more important.
Exactly.
Then. So that is where businesses pay in order to be high up or related to a search. So if somebody in America types, car insurance, then it's going to put Geico's ad up there, and it's going to put Allstate's experience up there, and so on and so forth. Somebody wants to buy a car, if someone's looking for a haircut, if someone is looking for a glazer to replace the window that just broke. I mean, an absolute plethora of things. It's travel, it's restaurants, it's hotels, and it's getting stronger and stronger, and it's cross-correlated with maps. It's just a very powerful economic engine. Huh?
Yes, I mean, absolutely. When you Google restaurant Joburg and the guy who pays is at the top, let's say it's Panarotti's in Cresta, it'll have a map, the map will be linked to it, you will have everything you could possibly want to know, the news items.
Whether it's full at this time of day or not.
Absolutely,
all that kind of
and that's how powerful this thing is. But so this is a highly cash generative side of that, side of Google as well, and that's how they fund all these extra bets. But it is also kind of, especially in the search engine space, it's reaching maturity a little bit. So these guys...
How can you say that though? If most searches are mobile and you said people have still not got as many smartphones as we'd like to see around the planet.
So, I mean, in terms of the amount of ads that are actually on Google, you could probably increase revenue through increasing engagement, through smartphone penetration and all the rest of it. The expectation is that is not going to grow as fast as it used to grow.
Okay.
It'll kind of...
Year on year, because of course it's so much bigger.
Absolutely. Yeah. Their focus is now on these video ads, and that is why they are pushing YouTube so hard.
Yeah, which I must say, I'm a YouTube user in the sense that we publish those blunders videos on Fridays onto YouTube, and I must say the experience has been fantastic. Let's have a look and see though what the share chart looks like, because if you've owned this one over the last few years, that's been a happy ride for you. In recent times it's even gone higher because they've crystallized how much these other bets are costing, and that's part of the reason for it being called Alphabet, is they wanted the holding company separate from the search engine business. But there you go, $827. It's one of the world's largest and most valuable companies. Management seems to be quite assured of themselves. Ruth Porat is the CFO that's added something to the business so that the crazy founders can continue to be crazy and do wonderful things.
Yeah.
But here's the question, do you buy them now? I mean, is it hot for you? Do you think it's a part of a portfolio even at these elevated levels?
Yeah, but I mean, if you have to look at the price to earnings ratio, right? And you have to look at that.
What was that again? 30?
Yes, but on a forward basis, it's only 23. So that rating unwinds pretty quickly. And if you look at that on a forward PE basis relative to the rest of the stocks that we're looking at today, it is by far the cheapest. And you may argue it's one of the highest quality stocks in the sector. So from our perspective and from my perspective specifically, it'll be hot.
Excellent, good. Hot for me too. And as I pointed out earlier, we own it in the hot stocks portfolio. We own it, I own it personally, and lots of clients own it too.